Thanks, Anne, and thanks for inviting me for this presentation. The title is Trading ABC Patterns with Market Context. I've been trading ABC chart patterns for the past at least 10 years, and I'm trading more than 16 years, but exclusively ABC chart patterns and the harmonic patterns for the past 10 years. And I wanted to present this as this is very close to me. I've done a lot of research on it, so I'll be showing you my methods of how I trade ABC chart patterns. And I'll also show you one of the very key component of the trading is market context. And I'll show you how I detect the market context and how we actually use it in validating ABC patterns and how do we use it to trade it. Before I go further, I want you guys to take a brief second and, oops, my mouse died here. Take a brief second and read my disclaimer. I'm purely a private trader, and I do not have any type of a research material. I'm presenting it for any other purpose other than purely for education purpose only. And also all the material I'm presenting it today is a copyright material, and please do respect the copyright law. Before I go, I thought I would do is I would present with the introduction. A lot of you probably do not know me, who I am or what I trade. So I'll just give you within just 1-2 slides about myself and what type of instruments I trade and what is my background. And then I'll go into why I trade patterns and why I think pattern trading is far superior than other forms of trading. And within that, I'll show you some of my research and some of my other work which I do. And you can also see it on my website, which is surinotes.com, which is the free website, which actually attracts a lot of your traders to come to the site because I do post my trades and my ideas and any type of research in real time. It's a free website, as I said. You can also go onto my my website and see under the research about 30 or so articles I have published, and all the articles you can see it, and then many presentations I have presented, and there are also links to various presentations you can view it also. So then after the pattern trading concept, first when I introduce it, then we move on to the topic is the ABC patterns, and I'll start showing you ABC patterns and what I call them, how are the ABC patterns and what type of harmonic ratios it will have, and then how do I trade using a specific entries and exits. And then we go into the market context, and then in the end I'll show you lots of examples, and if you do have questions, please write it down, or you can just type it into the window what you have, but I will try to come back and answer those questions in the end. So first is an introduction. I've been trading the markets for the past, I guess, the 16th year right now. And first, I came to the U.S. for my higher studies, and I have engineering degrees and business degrees, and I have about 8+ years of a corporate America experience as a robotics engineer. That's what my training was. I have a master's degree in it, and then I started trading about 16 years ago now, and I trade full time. And my strongest skills are primarily quantitative and mathematical skills, and I use that in the markets to apply for various analytical solutions, and also like I do have a lot of programming skills. That's the reason I've built a lot of these auto detection patterns, and then I trade them using some of the automated methods. As I addressed before, I have published over 30+ articles. Over 30 articles in various magazines, including Stocks and Commodities, or Traders World, or active trader magazines, and also have presented in various conferences. And I'll be showing you. I have written a book called Trade Chart Patterns Like the Pros. The book title is, you'll see that at the bottom of the this presentation, this slide, and I'll be showing you in the end. I'll just present my book also in 1 or 2 slides, and you can see it, and then I can show you a link where you can get it at a discounted price. My primary way of trading, actually my only way of trading, is pattern trading, and I use the TradeStation to detect these patterns, and that's the only platform I use it at this point. And I do trade stocks, options, and futures. So I trade futures, that means E-mini futures purely from an intraday perspective. That means I do not hold any positions overnight, whereas stocks and options purely from a swing perspective. My trading primarily consists of, my book actually has over 60 to 65 patterns in the book, but I use only 6 to 8 patterns because we know that nobody can be really fluent in all the patterns at any time. So I had to do a lot of research in order to write the book itself, but I am pretty fluent in 10 patterns. Each of those patterns I have traded one time or other, but I think these 6 to 8 patterns which I use it for my day-to-day trading, and I also use something called embedded and failed patterns concepts. And these ideas I will be presenting in my future presentations. And I have for every pattern setup I have a very specific entry and where is the stops and targets, and these are very specific to each type of setup. And some of them I'll be presenting here. And also we'll present extensively the market context topic, and I'll show you what type of pivots and what type of market internals I use it and how I built them. And I'll show you those examples also. As I address, I trade stocks and options, primarily the US markets, and I do trade some of the ADRs from China and India, but I trade stocks and options primarily from a swing trading perspective, whereas E-minis I trade S&P futures, Dow futures, or NASDAQ. I also trade gold extensively, not so much of the oil. I did in the past, but now I focus on primarily these 4 instruments during the intraday. And all my analysis and trades and setups, everything what I do is actually documented. That means every trade I have taken, not now, probably from the past 10, 12 years onwards, I document every single of them, and then I also post them onto my website in real time. That means as soon as I see a trade setup, I have a method to just automatically capture the image and send it to my website, and it just comes to my website right on the front page itself. To the top of the images, that's what I'm thinking at that instant. And then I also do some end of the analysis, and I'll show you. I'll also post that end of the analysis. That's what I was just doing it just a few minutes before. So if you go after like at 2 o'clock means 5 o'clock East Coast time, then you will see some of the trades which I posted on my website, and those are for my swing trading, and those are purely from indexes and also from the stocks. So why pattern trading? I know there is a multiple types of trading there, and there's a lot of people are very, very good in that type of trading, and people trade momentum trading, day trading with multiple different type of setups, oscillators, tape reading, and also of course pattern trading. There's a lot of traders also trade pattern trading. So why do we need to trade patterns, and why do I think patterns are more superior? Well, one of the biggest thing that the chart patterns is, chart patterns are actually repeatable. That means a single type of a pattern, it repeats more and more in many times over a period of time. And that's the reason chart patterns. So if you learn a chart pattern, and if you know how it behaves in a certain conditions, then you can actually use that pattern to actually trade it, and then it becomes a predictive method. And also patterns are much more objective methods. That means they have a far better advantages over any other form of a technical trading. That means these are objective, means that they actually show up in a specific areas, and also that because of that reason they provide a clear entries and stops and targets. So once the pattern is formed and once you have an entry, then you need to worry about the price action more than the pattern itself. So that's the reason I think patterns are great in the sense, because that's how the patterns are formed. There's a multiples of other patterns, but I guess I will be presenting about a couple of them in this presentation, primarily using the ABCs. And also patterns provide multiple opportunities. That means, let's say suppose if you have a pattern and there's an entry level, and for whatever reason, let's say you miss that entry, and then as long as the pattern is intact and as long as you stop and your targets are not hit, you can actually take positions at any time. You know that is the target. So let's say suppose if you almost come in the middle because you missed the entry, you can still take the entry into the pattern because you know that now the target is far from the entry, and that's the reason you can actually enter into that. And that is the greatest thing with the patterns. Whereas let's say suppose if you take an oscillator type of momentum methods, if you really miss that first cross ever happen, then actually catching that will be in the middle will be very difficult. That's the reason I actually do not use any type of a momentum or they just do not work for me. And also momentum, by definition, it actually lags. And that's the reason a lot of momentum traders, in a greater momentum, everybody makes money, that's great. But on the other hand, momentum actually changes on a dime and it then becomes a choppy. And that's where a lot of trader gets chopped too. And also there is another way of a pattern is patterns have a lot of embedded patterns. That means I'll be showing you a few examples here. Let's say suppose if you take an ABC pattern, ABC pattern exists in lots of other patterns like the Gartleys, a head and shoulder pattern, even double bottoms and double tops have ABCs embedded. So this is the way. So if you learn a single pattern like an ABC, which is probably the most universal pattern, and that will actually give you way to learning a lot of other patterns. And that's the reason I think ABC is probably one of the simplest but most powerful pattern. The difficulties about the pattern trading is actually they're difficult to identify. That means people becoming perfect in the patterns, it probably takes a lot more time. And especially some people think that it needs a lot of mathematical or geometric skills, which I don't think you need to. But I think you can just detect them by just looking at the charts. But that perfection may take a longer time. And if you are a developer, in fact, it takes a lot more difficult to code patterns, because the detection and identifying patterns is really, really difficult. That's the reason I spent last 10 years, writing multiples of these harmonic patterns. Multiple times I wrote it. Of course, now the current method what I have is probably the best, and it's actually the 4th year I've been using the same method as what I use it, and I'll be showing you that. Pattern trading, one note about the pattern trading is, before I go and actually show you a lot more details, is that there are no perfect patterns. All patterns actually fail. There is no single holy grail pattern. I have never found it, and I don't think I'll ever find it. So I keep that in my mind, that none of these patterns are really perfect, and then I know that they fail, but what I want to know is, I want to know when you trade them and when you avoid them, and that's what is the key in the pattern trading. And I'll be presenting with you my ways of how to trade them. So this is the standard question a lot of people ask me is what are my favorite patterns? Because I know that my book has 65 patterns, but what type of patterns do I trade? Well, absolutely, I love to trade harmonic patterns. I guess, because I do have an engineering background and I have a math background, because of that reason, I like to trade the symmetry, and I like to trade the ratios which are forming in the patterns, and so they look like in a geometrical patterns. And that's the reason I trade ABCs, Gartley and butterfly patterns, and these are also very popular with traders, and I like to trade them and I detect them automatically, and I'll be showing you a few slides also. And other patterns are double bottoms and double tops. These are extensively found, and I use the ABC itself to detect the double tops and double bottoms. And I also trade head and shoulder and inverse head and shoulder patterns, and they also found using the ABCs again. And other ones are like the breakouts, like the standard breakouts, like the channels and triangles, pennants and flags. And the bottom one is the last one, is the broadening, wolf waves, three drives. Three drives is relatively easy, but broadening and wolf wave are much more complex. They're also very rare patterns, but broadening is probably one of the most reliable, that means most successful pattern. But it's a very rare pattern. But when you do see these patterns at the bottoms and tops, statistically it's one of the most successful patterns. So now let's get into the actual topic of ABC patterns. So ABC patterns are first actually written about in the book by H.M. Gartley, and this is the same Gartley who popularized the Gartley the 5-point pattern too. And the book is called Profits in the Stock Market. And this book is written in, I guess, in 1935, I think. And then the ABC pattern primarily looks like it almost looks like a lightning bolt. So basically what we have is, I'm actually going to use my pen and start showing you some of the ideas. Basically there's a trend which is from the top to bottom. We see this is the trend, and then there is a retracement into it, and then there is a continuation of the trend. Sorry for my drawing. I guess using this pen, that's how I can draw. But so this is the way of calling it. So what we do is we trade. Once we detect this ABC pattern, ABC, we trade C to D level deck. That means we are actually trading with the trend. The prior trend of the AB side, that's the same. We're going to trade it in the CD side. So this pattern is also called 3 pivot, 1, 2, 3 waves, and trend. So it's basically trend retracement trend pattern. Some books actually talk about the AB equal to CD pattern, but that becomes a reversal, which I'm not very interested in trading AB equal to CD patterns, but I like to trade AB and CD as a continuation patterns. So what we do is we trade in the direction of the trend. That means AB is one direction, then we trade in the same direction as the CD. So let me just show you an example of what ABC bullish pattern looks like. And this is an intraday S&P futures pattern. And here what we are seeing is an ABC pattern, which is in blue. And then this is, of course, this line is that means it's actually forming, and it shows that it's reaching the target. So as the pattern is forming, this ABC, we must detect this pattern without absolutely any delays, because we don't want to enter the trade after 3 bars ago or 7 bars ago type of thing. So as the pattern forming, what we need to see is we need to see where is its entry, and this is the entry. It marks its entry, and it also plots you where the stop is supposed to be. And the stop is basically in this AB. This is the A part, this is the B and C. So the stop is actually few ticks below the C level. And then while it plotting this ABC, it also shows you this entry and stop, and also your targets dynamically. That means the targets are obviously, what we do is we take this AB length and we project it from the C level. So from here, you can, so now these are all the targets. First target is always the 0.62 side, 0.62 times the AB. That means we take the leg of AB and take the 62% of the AB leg, we project it from C. And then the next is 79, 100. So you can actually customize it yourself. But the secondary targets are up to 127 and 162. So that's how the ABC bullish pattern looks like. Now let's look at it how the ABC bearish pattern looks like. And this is the ABC bearish pattern. This is actually in a stock called a PF Chang Bistro. This stock now doesn't exist. I think just as of like 3-4 months ago, some hedge fund company took over this restaurant, which is a very popular restaurant in the U.S. And so this now here we have an ABC bearish pattern, and this is on a daily chart. And here we have an ABC pattern. Here also what we are seeing is, and this is the EL, it marks EL here, and there is the stop here. So, and also this is also a part of a head and shoulder pattern. So you see this is the head level, and whereas these two are the shoulders for it. And this is the, so when you use this ABC patterns, you have multiples of information. One is the head and shoulder pattern, and also you are seeing the ABC pattern itself. And I'll be showing you a lot more of these examples. So now, as I said before, ABC is a universal pattern. That means, charts always exhibit an ABC pattern. That means you can take any chart at any time frame of any instrument. Chart is always in an ABC. That means the market is always in a trend mode or a retracement mode. So once you see the trend and retracement type of a pattern, then that becomes an ABC. And also this ABC patterns are also part of Elliott waves, which is a 0, 1, 2, or 2, 3, 4. These are the ones, and I may have an example in the end. I'll show you that also. So ABC patterns are also double tops and double bottoms. So if, let's say suppose if your A and C levels are pretty much identical or within the like a 5 to 6% difference, then they become double tops and double bottom patterns. And also head and shoulder patterns, channels and flags, and I have a diagram to show you all of this. Gartleys, in fact, Gartleys is the predominantly the internal pattern inside the Gartleys are all X5. X5 means the 5-point patterns are ABC based. And also dragons and 3 drives. All these patterns are actually written in my book. If you do not know what a dragon is, or if you're not seeing any type of 3 drives, and you can actually see lots of examples in my book too. So here is an embedded pattern that I just wanted to show you why ABC is most universal pattern. So what we are seeing is lots of these patterns. In fact, I do them by hand, and you can see these, the triangles which actually mark the, the black color, and those are the ones which are actually an ABC type of pattern. So we are detecting these ABCs in this pattern. So this is just to show you that, if you know ABC, how to trade it, then it may be embedded into a larger pattern. And so now you can use, now you have two types of information to trade it. So that I actually like to trade those type of patterns because it actually shows a lot of confluence and more confidence in those type of patterns. So every pattern when we trade, we need to have some type of an entry logic and trigger. So I'll be presenting, what are my entries using the generic type of entry patterns, and then I also show you some of my exits and what type of stops I use it, and how are they calculated also. And exits are targets. Targets are usually measured moves, because in patterns when you're trading it, I use Fibonacci extensively, so I'm using a measured move of a using Fibonacci ratio. That means, let's say suppose in an ABC pattern, when I see AB leg, and I'm using that AB leg using the Fib ratios to say 62%, 100%, 127, 162, and those are all the kind of measured moves, and those are projected. And also if I'm trading primarily, let's say suppose if I'm trading equities, and I do have a time-based kind of targets which I use it, so it's like a 1 to 3 day kind of intraday or time-based. Time-based is suppose if you're a larger patterns and a daily, then you have your targets. You can also project these time targets, and you can project it in the future. I may have a few examples to show you there also. So with all this, I actually built a tool called Auto ABC, which is in TradeStation only. It detects these patterns in real time without absolutely any delays, whether it could be a 1-minute chart or a 1220 tick chart, or whether it could be a stock or a auctions or even even currencies or FX futures, any type of instruments. It actually finds the ABCs, and it provides the entries and stops and targets dynamically. And once the pattern is formed, that's what you'll be seeing, and then these are all plotted without any delays. And it also has the time projections, and the time projections are incredibly useful for options traders. When I trade options, I'm actually looking at daily charts and looking at projection to say, well, I know that this is the 100% is happening at this point, but I also need to know what is the time frame, when is it going to happen, so that way I can buy a call. So I know that which month call I need to buy it. So I use the time projections. And also ABCs can be scanned using in the radar screen. That means you could have hundreds of these symbols in multiple different time frames. You can put it into a radar screen, and if you have not seen a radar screen, it looks like a spreadsheet where it will detect these patterns, and it will show you at that point where is the C entry and how many bars ago it's formed, or is it formed just now. So you can actually have all that type of information. And then it's fully customizable with all your line colors and your different sizes and then different ratios. All of them you can actually constantly compute it. So here is the Auto ABC, one of the pattern, how it finds it. And I guess I was also talking about the time projections, and you guys can see this, and these are all the time projections. So when this ABC is formed, and it also shows you that there is an entry, and this is the stop, and these are all the targets where it's plotting on the y-axis. But on the x-axis, what you're seeing is some of them are, these are all like a monthly targets. And that's what it says. The cycle, the 100% of the ABC cycle is happening, for example, the third time period, it's like a 20th June, like in this. So that's where the time target is. So that's how it plots it. And then now once you have this chart, then you can actually constantly use it to trade, either enter into either day trading or even into the options trading or position trading. So now, before I go and show you a lot more details, let me actually show you what type of entries and what type of exits are there. And every trader must plan their entries. If you have not planned your entry, in fact, before you actually taking the trade, you have plenty of time to get into the trade, and you even have an option to not to trade a pattern. But once you enter it, then you have a very little time for exit. So because of that reason, I say a planned entry leads to planned exit. And that's what I spend lots and lots of my time actually analyzing the charts and patterns. And because at the same time when I'm planning my entry, I also know what type of exits, whether it could be as losses or whether it's stop losses or it could be targets. So I'll be showing you a couple of examples of what type of entries. And this is particularly, these entries are not necessarily for ABCs, but this is for generic for all types of patterns. And whatever patterns I detected, I use some of these type of things. I use multiples of entry algorithms, and within that it will actually find what is the best for that, and I have a ways to detect it, what is the best entry algorithm. So here are the few entry algorithms which I use it. One of it is we know that if the price actually trading above the previous bar's high, the best is even the 2-bar high. If the price comes back and closes above the 2-bar high or a 2-bar low, then that is actually kind of an indication of a reversal. So let's suppose if you are seeing an ABC pattern, and then if a price actually reversed and then closed above a 2-bar high, now I know that this pattern may have completed. So now, once it's completed, now I know that I can actually safely start trading that pattern because it's showing the first sign of a reversal. And I have a graphic also I'll show you in a second. And then of course swing highs and swing lows, that's also very critical. If you're a conservative trader, what you need to do is you need to wait for a previous swing high or a previous swing low to take over. So once the price trades above those levels, now you can actually enter into that trade. And then other concepts are, some people use the trend lines and support and resistance, and people use the moving averages. I also use them, but my entry techniques are different because I never trade a price level, because price levels are just the price levels. You have to trade a pattern and a setup. And my way of trading is purely a pattern-based trade. So in that pattern, I need to have an entry, and that is my reason to trade, and that's what I trade. I don't trade any kind of a 200 period or a 89 period moving average. I do use them as a support and resistance line, or even to figure out the context, but I never use them just to say that, oh, well, it's bouncing off of a 200 period moving average. Okay, let me go on long. Let me go and take a trade, either go long or go short. Those type of trades, they may work like 2 out of 10 times, but 8 times it actually give you a losing position. So I would not trade those type of price levels. And also wide range bar, and I'll be showing you a couple of examples. The N-bar range technique is actually popularized by Toby Crable. I'm sure some of you probably heard of it, and he wrote a pretty popular book, I guess, which is out of print right now. But if you search, if you Google Toby Crable's name, you'll find out. And I'll be showing you the technique also. So here is one of my first entry technique which I wanted to show. So what we have is a 2-bar high and 2-bar low. So here we have a pattern ABC which is complete. And then what I'm looking for it at the end of the pattern, I'm actually looking for a price to actually close above this 2-bar high. So here, this is where the C is completed, and then we have a 2 bars. The second bar is saying it's actually closed above this point, and this is my entry. And then this is how I actually continue to. So when these things happen, even I have an automatic ways of detecting these entries. So they actually show me the level where the price needs to be closing. So it will actually say that EL EL means entry level. And it's the same way what we have is a bearish pattern here. In this bearish pattern also, what I'm looking for is a 2-bar low. That means the pattern, the lowest of these 2 bars is something here. Yeah, so once the price starts trading below that point, and that is my low to short it, or if I'm in a position I actually want to get out. But if I'm going to enter into these shorts, that's the first thing is I'm going to wait for is the price to trade below the 2-bar low. And the other one I talked about is the swing high and swing low. So let's say suppose if you have a pattern, this is like a double bottom pattern, and this double bottom is also kind of a dragon pattern. If any of you read my book, you will see that. And here, one of the concepts is to wait for the price to actually close above the swing high. So the prior swing high, if you want to trade this pattern, so now you're somewhere here, you wanted to actually wait for this price to close above the swing high. And that's also a very good valid entry to trade it. And same thing is with the swing low. Swing low means where you have a, you see that this is like a double top pattern, and in this double top pattern you wanted to enter into this state, so you wait for this swing low to actually price to close below that level and then actually short it. Okay, so these are all, as I said, I'm constantly evaluating these charts, but these are also automatically detected, because that way I have to like at least reduce, my stress level to say, well, okay, I don't need to exactly measure what is the price level. In fact, it constantly shows me what those levels are in numbers, so I can read it easily. And here is another technique, is that using the breakout and breakdown bars high. So that means we know that some of the breakout bars and breakdown bars, basically they break out and then they fail. So what we call is a fake out type of things. Instead, so when those things happen, what we do is you actually wait for the breakout to happen first, and then now you trade the breakout bars high. So even in the next two bars, actually price traded below the breakout level, but then once it started trading above that level, now you know that this is the breakout confirmation. So you can actually trade that kind of a breakout from that level. Here is another pattern using a wide range bar. Wide range bar means that's you could use either a 7 bar or even 13 bars kind of thing. So wide range bar means basically the range of this pattern, this bar, is the highest in the last 7 bars. So here what I have is I have a Gartley pattern which is actually completed, and then once it's completed, one of my algorithm looks for and says, well, what type of a price action is happening? And at that time it looks and says, well, there is actually a wide range bar here. At this point, now I'm going to use that high of that bar as my entry into actually entering into the pattern. So that's another way to enter it, is a wide range bars. Okay? And then exits. Exits are also must be planned. As I said, if you do not plan exits, then you randomly probably enter, get out of the trades, because there will be a lot of anxiety for traders who are trading discretionarily. So, when you're seeing, let's say suppose you have like a 2-point profit, and then all of a sudden it retraces back to 0.5 profit, then at that point, then your anxiety kicks in. And then you will say, well, I guess, I'm going to take the 0.5 and get out. So those type of things, if you have planned your entry, then you will know that you will actually build a confidence in the pattern and say, well, my actually target is 3 points. I know it went up to 2 and it came back to only 0.5 now, but I know that according to my research and my analysis, I know that this will go to this point. 3-point targets, and that's the reason you can actually have a confidence and weight in those. So that's the reason I say that you must plan these entries, exits. Otherwise, you will be taking randomly entries and random exits, and those are usually never be a successful. You'll never be a successful trader if you do that type of practice. And then, of course, in exits, a lot of people practice it, and I also use support and resistance levels. As I said, I never use price level to enter into new trades. I think that's what is the one. Basically, you never want to trade a new trade based on something. But let's say suppose if you do see these moving averages, you are in a trade, and then you start seeing some type of a confluence of your target levels, and also let's say 200 period or whatever period moving average you're using it, in those type of levels, those are actually very valuable. So that's the reason I just said I also use them. And I will be showing you a few examples as part of my market context tools. And then fib levels is also very critical for a lot of traders, and I do trade them. ATR is the average true range. So people use a specific way of trading is they use a certain type of a current ATR, and then they use multiples of those ATRs to exit, and also bar size exits, and I do have an example to show you. And another concept a lot of people use is a dollar-based exit. So you enter into a trade and say, well, I want to take a $300 target. So that's like a dollar-based exit. Now you're not worrying about the points, but you must make sure that your money management is making that. So if you, let's say suppose if you enter with one contract in S&P futures, that means you must, so if you have a $300 target, that means you're looking for a 6-point rise. So if you have a 6-point rise, so you better have a decent pattern or some theory for the pattern to move up to 6 points. So if you use multiples of contracts and say, well, then I only have 300 points, so let's say suppose 3 contracts, then you just need to wait for only 2 points. So that type of thing, but I know it's kind of a personal, so I guess, I'll leave it up, whatever type of dollar-based exits. But these are the some type of exits which I use it. So some of the tools which I use is, again, moving averages. As I said, I use the 21 period and 89 period XMA. XMA means exponential moving averages, and 200 period simple moving averages. One more thing, I do want to stress here that I do not use these levels to trade, to enter into new trades. I only use these levels looking for a confluence, and also looking for some type of a way for me to detect the market context. And also I use the swing highs and swing lows. These are also the exit, these are also really valid exit points. And then of course trend lines, which is a little bit, it gets complex unless you are very thorough with the knowledge of the trend lines. That also is valid exit points. Previous day highs and using the pivots or the first hour highs and the Fibonacci retracement extensions. And these are also, all of them are really valid way of exiting it. So, but these must be, some type of a theory must be there. You can't just simply see a number and then exit it because, then in that case, basically that means you're randomly exiting. So here is one of the concepts. I only brought like one of the exit, but I'll show you plenty of them in the charts. Here is one of the things which I think people ask me all the time, what is the bar size exit? Well, one of the patterns which I trade is something called a pipe tops and pipe bottoms. This is also presented in my book, you can see too. So when the price stops to happen, what I do is I actually take the depth of the pattern. That means the depth of the pipe top is the first bar in this, that's the depth. And because that's the longest in the pipe. And that depth, I use it, and then I use, if I short it, then I'm using that same type of a pipe top to actually using the targets to get out. I know this has nothing to do with ABCs, but I thought that I'll show you this is one of the concept of the exit. So you could use multiples of ways, but I'll be showing you other type of exits in a second. So I think I talked about this radar screen in ABCs. I'll show you how the radar screen looks like. And here it identifies retracement C%. C% means where is the C at the current point, because that is where your decision point is. And also the number of bars, that means how long ago the pattern has formed. So because you really don't want to trade if it formed like 50 bars ago, because that means you're literally saying that it's a 50 trading days ago, or even intraday 50 bars ago is too late. So you may want to trade it within the 3-4 bars. So in that case, you wanted to know how many bars ago this pattern forming, and then what type of entry, stops, and targets. And also it shows you a perfect ABC, and I'll show you what is the perfect ABCs to trade it. So here is how the ABCs look like, and this is basically this is from a radar screen chart. And in this, what we are saying is the first column in this green, and this is actually an ABC bullish patterns. All of them are ABC bullish patterns. So what we are seeing is the first is the C%. C percentage means, for example, if we take the CVX, I'm not sure when I took the graphic, but CVX is currently trading at, let's say, $93, but it has an ABC at that level. This level is 54.62. That means the C is retraced about 54%, and then but this happened about 275 bars ago. This means this is absolutely not useful. In fact, I bet this might have taken this. Probably this graphic has taken in. I'm thinking like April of May of it, because that's when, if you look at it from November onwards, many stocks have actually started rallying, and all of them were in that. And then it also shows you what is the entry, stops, and then also your targets. You have 3 types of targets, then it will show you those targets, and then it will also show you types of ABCs. That means there are types of ABCs which have still not released this particular part of it, but everything is available there yet. I'm trying to add on to the radar screen now to finish off. So there are different types of ABCs. The type 1 is actually a perfect ABCs, and I'll show you an example of what a perfect ABC, and I'll show you why I call them is a perfect ABC too. Here is the ABC radar screen. This is, in this case, you see both the bullish and bearish. So here we have all the stocks. This is actually, that's a date at least. This is actually in 2011, but you'll be seeing lots of these, this type of patterns, and where all these are detected. Not only they're detected, but it also shows you whether they are perfect ABCs or not. And the red means that they're actually ABC bearish patterns. So here is another way of looking at the patterns is not only you can detect ABCs in the price itself, but you can also detect in underlying options. So let's say, suppose if I have this is an example of a Baxter International, one of the, I guess it's one of the chemical company stocks, and this is the Baxter is, I guess it's a healthcare-based chemicals, I think, and then this one, there in the subgraph, means in the bottom, what we are seeing is you can also use ABCs to insert into subgraphs. You can see options prices and how they are traded. So let's say, suppose if you do take a position in ABCs using this EL, but you are taking a position in options. So using this type of ABC, you can also use that entry level and then see what your targets can be. So of course you're targeting both the the stock price, but also an options price using the Fibonacci ratios. And here we have a 100% of AB price level is happening here, and you have a target is happening, the time target, but then you will also know what type of a time projections, what type of a price projections you can take in the options too. And then this is another example of ABC is in options. So you have a multiple ways of looking at the options. So this is an options chart. And then ABCs, you can also plot it in the range bars. Range bars means, I'm sure some of you already know what range bars are. They have equal range. So this is quite useful, especially when you're trading intraday. Range bars actually suppress the noise and also like a type of volatility. So that way, if you're trading range bars, you have to only trade range bars. Then when you're looking at range bars, the charts, then you can apply these ABC setups inside. So even in that, it will show you different price levels and different entries, what you can see. I have posted a few videos on YouTube under my ID called Suri Notes, and you can see ABC videos and a few other videos I posted it, so you guys can actually take a look at it on YouTube. So now let's get into the market context, because we know that we know how to detect the ABCs. But the key is, can we trade all sorts of ABCs? No, we cannot, because as I said, ABCs exist quite a bit. And so, as I said, in fact, if you take a chart of any time frame, there's always an ABC. It doesn't mean that you can trade all of them. And that's what the key element of the market comes, is something called a market context. And I would think market context, I'm sure all of you traders are already using some kind of a market context. A market context is primarily like how you use your pivots, or how you use your moving averages, or some type of a trend lines, support and resistance, to say that, well, the price is trading above 200 period moving average, so I think it is bullish. So your way of context is maybe something like that. So what I thought I would show you is, I'll show you my way of detecting what market context is. So what I do is I actually lay down something called a fib grid on the charts, and this uses few of these tools, and I'll show you what it is. So basically, what I'm interested in actually every pattern, not just ABCs, whether it could be Gartleys or a double tops, double bottoms, or even head and shoulders, or any type of pattern which I'm analyzing it. I'm trying to look for it from a market perspective. I'm trying to see how are these points in ABC formed. So I actually lay down something called a fib bands. Fib bands are Fibonacci bands, and they actually take a key moving average, and now it actually adjusts for the volatility, and then we actually use that to distribute different levels of fib ratios from the key level. So it actually forms, and I'll show you a fib bands chart also. So the first thing what I do is I take a chart, I take any type of a chart, price chart, and then I put on the top of it the fib bands. So that way I know how is it trading, whether it's trading above in the top range of the fib bands, or whether it's trading at the bottom range of fib bands. I'm sure some of you already use some type of a moving, some type of Bollinger bands, or moving average envelopes, or standard error bands, or I'm sure a lot of you probably use some type of bands already. But the fib bands is something which I constructed, which basically uses a critical moving average, which adjusts for the current volatility, and then we actually use some type of a fib ratios. These are actually projected from that to from above side and the below side, and that's what I use it. And then I also use the pivot levels, and these are very critical. Floor pivots and the Globex pivots they're absolutely the best pivots to trade it for the first 2 hours of the U.S. market open. That means from 9:30 to 11:30, just before lunch. And then the OR pivots is the opening range pivots. And then also I use the ABCs. So what I'm doing is I'm actually using this type of some kind of a grid on the pattern to detect whether the patterns are originating or actually terminating, or are there any confluences within my targets or within my entry levels. So that's how I actually know that whether an ABC is tradable or not. And I'll be showing you examples for that also. So on a daily and weekly charts, I'm actually using again the location of the pattern, and I use the weekly and monthly pivots, and then how is it reacting to certain type of a price, fib bands, and the moving averages. So let me first present what a fib grid is. The fib grid is, it shows the pattern, support and resistance, and its structure. So it's basically, I use a few tools, which the first is called a fib bands, and the second is the pivot structure, And third is a market structures. Market structure is an idea of how we detect the market keep turning positions. That means, let's say suppose that the market is selling off and then it stops at one point and then it starts reversing it. So now I actually detect that point called a market structure. And this is again, it's written in my book, and I may have an example too. And then I use key moving averages, which are 21 and 89 period and 200 period SMAs. So let's look at it, how it looks like. So this is an ABC pattern. The first is just the fib bands itself. So we have a pattern here where I think this is the perfect ABC, but I'll explain a perfect ABC a little later. But what we are seeing is the mid band, which is the key moving average, and then I have a 2 levels, which is actually projected one above and one below. And that's what, so when I'm looking at the pattern, so these are actually propagating as the price, every price bar, then fib bands also show it. So that means every pattern will have a completed fib bands it's surrounded by it. So here is another fib bands or a fib grid concept using the ABCs. And this is one of my trade in NQ, I guess. NQ, what I'm looking for it is how my price targets or how this price is actually terminating within a fib zones. The fib zones is another tool, which is again, it's not my idea. It's popularized by one is the H.T. Jackson, and the second is by Robert Krause. I also wrote about fib grid, fib zones in my book. I use it completely different from what they actually originally invented, and their purpose was to statistically detect if they can actually find where the highs are lows based on the previous day's data. And my idea is to use the data, the fib zones itself, as a key support and resistance level. So when the markets are selling off or when the markets are rising from bottoms, I'm always looking to see where are the fib zones and do I have any patterns to trade it within the fib zones. Are they originating in fib zones? Are they actually terminating in fib zones? So that type of analysis I do. And here is an example of a fib zones with using an ABC. And another tool is something which I use it called a CMI. CMI is a combined market internals. I think we know that in markets, of course, we follow the trends. We follow the trends, and when we are following the trend, we are always using the chart patterns to see our charts to see whether the chart is making higher highs or higher lows to detect what type of trend it has. But besides that, what else we have is we also have a market internals to tell us about where is the market is headed. So a lot of people use the market breadth indicators, something like a tick and trend, or they use the financials or advances decliners kind of thing. But what happens is when you use these multiples of these different breadth indicators, you're using different type of charts to see whether whether it's making any type of higher highs or higher lows to detect the trend. But then that becomes very confusing because you have a 7 or 8 different type of market breadth indicators, but then you are trying to use all of them and you're trying to read them because obviously some of them will be diverging it. They will probably, one of the element or other element probably not agreeing with the price action. So because of that reason, it actually becomes very difficult for you to actually find out what type of a market internals it has it. So I built an indicator called a combined market internals, and combined market internals are built using advances decliners, tick, trend, and XLF is the financial instrument, and also spiders. And ESI-NX is one of the most critical in this CMI. It's an arbitrage. I guess I won't explain what arbitrage is, but if you guys know that it is one of the way to actually detect how the futures are performing it compared to the cash. So that's what, in fact, lots and lots of traders trade arbitrage. You can trade it intraday. So that's what I detected. And this is purely an intraday indicator. So I use these 7 market breadth indicators, and I actually came out with the one single way of actually representing that. And then I plot it as a histogram, and I use it on a 5-minute chart. You can use it on any minutes, 1 minute, 3 minutes, 30 minutes. But I use it on a 5-minute chart. And because then it will tell me, so what I'm trying to do is, let's say suppose if I have an ABC bullish pattern, I'm trying to see if market internals are also bullish at that time. If they are not, I'm actually going to wait for market internals to turn bullish in order to enter into patterns. Again, I will not trade the market internals or any type of a market context by itself. I trade patterns. So I'm actually looking for a pattern entry, but which is actually agrees with the market internals. So CMI ribbon is another way of actually detecting the various components, and then I trade in the direction of the 5-minute CMI. And then of course CMI is also used for the divergence, but let me show you what CMI chart looks like. So I took these 7 instruments and then I plot this, it's a color CMI. So during the bullish time frames, so this is actually in a green condition, so now it's passing 0 and then it's going above the 0 level. So once the market internals start turning red, or once the market internals starting down, then I know that now from here onwards I probably cannot have any kind of a entries into a bullish trade. So because even though I may be seeing a bullish ABC, I know that the market internals are showing bearish, and I also know that market internals win about 99% of the time. Market internals win. That means you have to trade in the direction of the market internals. You cannot trade against it. So that's the reason I wait for it to give me some type of a signal in market internals for me to go with the trade. Okay? Here are a couple of other examples. This is again detected on different days just to show you. If you go to my website, you can see intraday charts, whatever I posted, including today's. You'll see like hundreds of these charts because every day I'm probably posting like 20-30 of my intraday charts. A couple of them at least includes the CMI. CMI, just to show that why am I not taking the position is because CMI is red here. So CMI is green and I can't short it, or I need to get out of this position. So that's what these are the concepts. So I posted it to my website. So now actually let me address what is the perfect ABC trade setup. So the perfect ABC setup is actually detected using 2 different tools. One is a ABC pattern detection itself, and the second is it's called a fib bands. So if you see these wavy lines around this ABC pattern, the ABC actually is in blue in color, and then we have these wavy lines. These are on the fib bands. So these are all, again, they're all automatically detected, including the entry level. So what I'm looking for a perfect ABC setup is, I want first of all to see a downtrend in the market, and then I want an A to form absolutely outside the extreme band of fib bands. So that tells me that A is outside. That means it's completely oversold. When the price started making this AB leg, even at that point, I do not know that this is an ABC. But what I am looking for it is, the price must trade above the mid fib band. The mid fib band is the middle, this brown colored line, or I guess it looks like black, the mid line. So the mid fib band, it must trade above that point, and then price must trade back below the mid fib band. And at that time, I'm looking for at least 50% retracement of it. That means my C retracement must be 50% of this AB leg at least. And in fact, the more it is, the better. That means the more means it should, if it is close to 60, 62, is excellent. But whereas if it goes beyond 80, 88.6, then I think that may be a double bottom. It's not a perfect pattern anymore. So when that pattern happens, then I know that this is a perfect type of a pattern. Of course, I'm also reading lots of other market contexts, including CMI type of tools. But what I'm looking for it is, now I want the price to actually trade above this entry level, and this is the entry level. And then once this market is there, as I said, all these are plotted completely automatic. So these levels are plotted, and this C level is plotted. So C level means it's telling you that that's your stop. And even these target levels are plotted too. So now you know that the first target is the 62%, and the second target is about 100%. So most of the time I'm there in the trades for 62% and 100%, and depending on the small types of ABC, the time frames I'm trading it, and the types of tools I'm using it. So that's how I use it to trade it. And the next higher targets is 127 and 162. I also use those as the targets, but for a next entry. But I guess I won't talk about that. But this is what is the perfect ABCs. So as how we detect ABCs in a bullish conditions, we can also detect ABCs in a bearish conditions also. And there are perfect ABCs in a bearish side too. So here is the perfect ABC in S&P market, and this is what actually forming. If you guys look at it, it's in December, from November, December onwards, all the markets, all the US markets, in fact majority of the other markets started picking up. Most markets really sold off in the world all the way until October, and then from November onwards most of the markets starting. So did S&P, NASDAQ, Russell 2000, all the US markets, including many US stocks, started showing this perfect ABC. Once I started seeing these perfect ABCs, I knew, because there was so many of the perfect ABCs performing. Now I knew that from then onwards, the probability the market is actually going to move much higher. So when this pattern was forming, and this is the perfect ABC, as we know that A is actually outside the extreme band, and the B is actually, this is the mid band here, the one I'm drawing, whereas this magenta line is actually 200 period. So the B is actually traded above mid band, and then C traded back, and if you look at it, this percentage of C is about 61.5, and once it happened, I knew that from this entry level, which is 1202, but of course you guys probably know that the market peaked on April 2nd or 3rd at 1415, and that was the peak, and of course now it's came back to 1350, and now it's retrying back, going above that level. I think that's what is next push is coming into S&P. So I guess this is the same pattern, but I guess after some time, it's showing you that this is the 62%. This is the same after a few more days, so I captured it here. Then another chart is called an ABC bullish pattern in Teva. Teva is another stock which I traded. This one is actually not only it's showing you just the ABC, perfect ABC pattern, but this is also an inverse head and shoulder pattern. This is the shoulder, and this is the second shoulder, and this is the head pattern. Okay, head here. So now once you have this, you can actually confidently trade it. Once your entry is about from here, and it actually traded all the way up till I think about $45, $46, and of course now Teva is coming back. Actually, Teva fell below actually $42, and now it's trying to trade back up. But first it traded all the way to $46 in the first move. Well, I can see here is an example. This is the Teva completed chart. This is actually what happened within January itself, 44, and I think it reached about 46. I'm not sure if it went to 49, because I have actually traded Teva from December, from actually October, November to April, and now I don't have any positions in Teva. Purely from options point of view. And here is another one, ABC bearish pattern. If you guys are looking at it, and this is the inverse head, this is the head and shoulder pattern. This is a company called Infosys out of India, but it trades in the US as an ADR. We have two shoulders, and also if you look at it, and I'll show you this pattern, and this is the ABC bearish pattern here. And that's also the targets may be here, but first is what I wanted to show you is the Infosys is trading using the head and shoulders pattern. And then now this is how the head and shoulder pattern, so not head and shoulder, ABC bearish is detected using the red. You can see it, and that's the ABC bearish. And these are all the targets. In fact, Infosys actually fell even much further than 52. In fact, now it's probably trading about, if I'm not wrong, it's trading about $45 range. Here it is again. See, this is the same Infosys taken much later. Infosys. These were the targets using just from the head and shoulders, but we can also trade using this is the ABC bearish pattern. So this will be the targets. So these are all, as I said, they are actually completely automatically detected. But since it's a daily chart, you can actually pull this chart at the end of the day, including the pattern. So here is another one, an intraday trade, which is using the ES 1220 tick charts, and I primarily trade ES 1220, and I also trade NASDAQ 610, and I trade YM type of stocks also, using similar type of YM also 610 kind of thing. And here is the ABC detected using the pattern, and here is the EL. That's the first entry trigger is about 1277.25, and this is my first target. That's about 1282 to 1283, and I have a multiple contracts I traded, and I have either a two-step or two-step exits. That means when I trade, I go up to 62, and then I take it to next level is up to 100. Then I also trade it, and sometimes I use a three-step process to exit out of the trades. But I always enter into the trade one time. That means I only enter one time, and I do not add it. I just basically enter. I used to add it a few years ago, but that type of thinking is wrong. So now I actually enter with all my positions, and then I start trading only up to 62. Go up to 62, and next level is 100% type of trading. Here is how it ended. 62% is here. That was the first. I guess I also do actually I know that 62%, I'm not the only guy who's looking at it. Probably many people are looking at the same level. So I try to exit 1 or 2 ticks before the pattern actually, before it reaches that level, so that way I can protect my profit. This is actually the, let me see if it is the same trade. Yes, it is the same trade. If you look at it, this is how this is the actual trade. Look at it, this is the 1277.5 is the entry, and this is what I was to show you that this is what I have traded, and this is how I got out of the positions. Here are a couple of other trades. You actually can see another one. This is captured before, I think it's all the way in 2009. You can see this ES is traded using the same type of EL levels and how the pattern emerged and then how the pattern targeted. And you can see the trade marks here. Basically, I entered here limit 6, and then I think I had other positions here before. Then that's how I actually got out of this trade, and that's what I was trying to show there. This is the ABC bearish pattern. This is again to show you the 4 different types of it. ABC, how ABC bullishes are detected. You can also detect ABC bearish too. I myself do not trade Elliott waves. But what I thought, whenever I see these Elliott waves forming, I do get excited at thinking that, well, not only I'm trading ABCs, but this is also an Elliott wave. By no means, I'm not an expert in Elliott wave. I've never found a great package and great software which can detect them automatically, and I tried to write it myself probably about 5-6 years ago, and I pretty much gave up. It's because it's too complex to write it. And so this is one of the way of showing it to you is, this is how ABC also can be detected, because in this, the 0, 1, 2 is detected, and this is the seed wave, they call it, at the first wave. In this is the 0, 1, 2, and then you can also look at it, this 2, 3, 4 is also another ABC, you can also detect that too. So that's how this is traded as an example. Elliott wave trade itself is, this is how it was capturing. So when it first formed it, I captured it. And then onwards, how it actually developed second, and then this third, fourth, and then how it actually completed pattern. So just to show you this, and I've not traded Elliott waves in a really, really long time. This is another one I wanted to show you, the embedded ABC patterns. So what we are seeing is a Xerox ABC, and this is an ABC pattern, but if you look at it closely, this is also has a Gartley pattern embedded, and I'll show you that in a second. But this just a drawing and showing you that, and that's how the Xerox ABC is. So that's actually detected automatically too. And now what we are seeing is it's actually a butterfly pattern. But once the butterfly pattern is detected, now I'm seeing this, and this is not quite completed for me to release it yet. So I use ABCs to still detect the butterflies and Gartleys. This is again, just the shading algorithm with shade set, so it just looks nice. So if you look at it, that's how what happened is, this is how the Xerox pattern was detected, but this is how it actually ended up much lower from the range of 12 when it went all the way to $7, and I think it even fell further too. Another pattern which I want to show you is a symmetrical triangle. This is one of my trade. I was actually trading ABCs, and then I saw this symmetrical triangle, and I saw this breakout which was happening. This is a 4-1, which is a April 1st of 2011, and then by following month, by May, I know the pattern actually broke out, and then of course it reached up to these levels. So I thought that I would show you is the symmetric triangles are also part of the ABCs are also part of symmetric triangles. Here is another one. This is the CVS, which is again in my trade. CVS I traded using both the head and shoulder pattern, the inverse head and shoulder patterns. If you're looking at it, and this is the inverse head and shoulders. And then, but it is also traded using the ABC patterns, and I've traded actually these multiples of it, and I remember it. Since I traded it last time, I guess it's not doing well. CVS or any of these retail, I guess stores are not doing well, including Walgreens. This is one of my YM trade in 2009, so I thought that I'll just show you this YM bearish trades. So this is the first emergence of a pattern, and the second one, and of course third, how it evolved it. That's actually my trade itself. This is another trade using the ABC bullish, which is I believe this is I'm thinking this maybe is, I guess this is a Dow, that's right. This actually paid for in 2009 when Dow was just trading in 7,000. That's what confused me. Yes, that's right. This is the Dow. And here is the another ABC bearish patterns and how they actually evolve and how they are detected and how they are actually shown. One more example of the ABC bearish pattern. And these ones, if you go to my website, you see hundreds and hundreds, if not thousands of these patterns. I post them in real time and also post at the end of the day. So you can actually go into the archives and go all the way up to last few years of it and see all of my trades, all my tools and everything. So now I wanted to present just like a 1 or 2 slides about my book. My book, I published it in 2007. It has become a very popular book for the chart patterns. The book actually covers about 65 patterns, and then it has about 225 of large charts showing you anytime when you look at a pattern, where would you trade it? How do you enter into it? It shows you where the specific stops are, or specific targets are. And then this book is also published, actually it's published it purely for traders using the trader's perspective. So it gives you a brief description of what the pattern is about, and maybe some small history, but it's only just in half a page of it. And then it goes into actually showing you, how do you trade this, and it will show you examples of, when you see these patterns and how do you trade it. And this book is also published in German, so if any of you are German readers or German I guess if you want to read the book in German, this book is also published, and you can actually purchase this book from my website. So this book is about 300 pages, and it's 8.5 by 11 inches long, and it has got 225 chart illustrations, precise entries and exits, and it shows you what the specific targets and stops. My website is surinotes.com. Surinotes.de is specifically built it for German, I guess, traders. And so what I'm doing it for the members of the Traders Log is the book actually sells for $59.95, but I'll give you a $10 discount, and I will send you an autographed copy for $49.95, $10 discount. What you need to do is you need to go to that website, that surinotes.com/TL. So I know that if any order coming from TL, I'll actually autograph it, and if you want me to specifically say anything, just send me an email, and I'll say that, and I'll just sign it up on your copy, and I'll send it out to you. And also, if any of you are TradeStation members, or if you're using TradeStation, I will give $100 direct discount for the TL members. For any ABC based products, there's a few more products like ABCs or ABC related products, or some type of combo packages I have. So I'll give you $100 discount, and it's valid until July 31st, that means end of this month. And this is my website, surinotes.com. You can go and read it. And I also post a lot more details about my trading, and some type of, I explain a lot more into a blog called tradechartpatterns.com. It's also, a lot of people use that too. And surinotes.com. Surinotes@gmail.com is my email, and my forums ID. If you're a TradeStation member, and if you're logging into forums, and that is my Demicron is my entry. So with that, I end my presentation, and I'm here. I'm going to take any of the questions, and thanks for the opportunity, and thanks for coming. Please let us know any of your questions, and I'll be answering it now. Dan, if you don't mind, because I think this particular window is very small on my screen for some reason. So if you don't mind reading the questions, and I'll try to answer them. Any number of questions you have, I'll try to answer it as long as Dan permits it.
Sure, Suri. Let me just take a look here.
Dan, can you hear me?
Yes, I can. Just a second, please, Suri.
Okay. Okay, fantastic. Thank you.
Okay, we have one question that says, do you have examples of current market action?
Oh, absolutely. If you go to my my website, you'll see lots of them. And if you want, actually, if you guys are seeing it, I can actually quickly go to my website and show you that also. Do you want me to do that?
Sure.
Okay. We'll just simply log into, actually, let's see. For some reason, my mouse dies once in a while here. Okay. Let's see. Discount. Let's see if I can go to my. There's lots of this one. Okay, this is my website. Here I post lots of these images, and let's see. This is the current S&P. In fact, I just posted today before started presenting 4:30. I just posted this, and this is the current ABC which is forming in the S&P market. And what we had, the before one, remember I was telling about from middle of November to, it actually went all the way to this 1422, I guess S&P, but 1415 is in the ES. It went up to, that was the first ABC, and this is the current ABC. One of the reasons which I am quite hopeful, in fact I do have lots of calls taken, is I am hoping that this market would get to this 1430 level of it, and this is the entry into it, and that's what I'm thinking, and I'm definitely going to look for this level of a 1380, the recent high, the swing high, and that would be actually an indication. If market trades above that level, now I will be confident that we are going to this 1430 to 1475 level. If, let's say, suppose if it breaks and if it comes back into this year level, or even because this magenta line is a 200 period, which is about 1310, now I think if it falls down, then that means that this ABC is invalidated, and now that means it will go much further down. I don't know how far it will go down, but only I have upside targets is 1430 to 1475.